Prakash Diwan is joining in now to give us his view. Prakash, hi, good morning and thanks for joining in. First, I wanted your thoughts on all that's been happening with Reliance. Of course, many news pieces here. The record date for the demerger of Jio Finance has been fixed, but also, this approval of reduction in the equity share capital of Reliance Retail. The larger picture is value unlocking for Reliance Retail shareholders. There's a succession plan that's being put into place as well. And, of course, the eventual listing too. On Reliance Industries share price, do you expect a lot more upside from here?
Good morning, Sonia. So I think this has been, a long time coming in that sense that people were anticipating some sort of moves by the company to set a roadmap for, especially with defined timelines and the process for a value unlocking. And this is, from that perspective, at least, the time correction, if I were to use that term, to define what Reliance is going through, is probably coming to an end. See, the price has always been much lower than what intrinsic value it carries, given the fact that it's firing on all cylinders, whether it's the O2C vertical, whether it's retail, whether it's telecom. I mean, things are shaping up so brilliantly in all of these. What this move does is it starts kind of defining some sort of a timeline for, the retail venture to also start getting monetized at some point in time, because this would have been necessary to start the process, right? And the other thing on the Jio Financial Services is that I think it's very timely. They're coming into a market where they've kind of prepped themselves very ideally for the kind of data that they have of usage, the kind of merchant establishment that are part of the network. So it's going to be a fairly quick start for them. I don't think they're going to be labored in reaching some milestones once they start off. So if July is 20th is the date, you could start seeing action thereafter immediately. So yes, the stock will probably smarten up. But again, I'm saying this is more of a timeline definition rather than a quantum definition of all of that. So value has been, we've been able to assign value to the RRV and the retail venture business as well. But it'll take some time for the market to digest that. And I think all eyes will be on the financial services rollout. And then possibly the AGM will cement all of that, all of these moves into some sort of a very concrete plan going ahead.
So would you say the rough valuation which has been ascribed to Reliance Retail is in line with what you would have anticipated? You're only...
Oh, yes.
Okay.
Yeah.
So the development here is more on the timing of it rather than on the valuation from the market.
That's right, Rima. Absolutely. Yeah.
Okay. And it signals, a benchmark and perhaps a floor as well on the valuation front. Prakash, hi, morning. We're going to be getting a signed DLM listing today. This is an electronic manufacturing company which caters to medical technology, defense, aerospace. So pretty good subscription as well. I think close to about 70 odd times. The grey market is suggesting a pop of nearly 50% at open. Would you still be looking at buying signed DLM if someone's not got the allotment in the IPO?
Good morning, Rima. So, I'm not a big fan of IPOs, in the IPO time, but what it does is it kind of gives you the opportunity to participate in areas which hitherto probably were not so easily accessible in the listed space. So, and I think the grey market is probably got a bit more excited given the Idea Forge listing on Friday, and there is anticipation that there is enough demand given the kind of FI flows, the anchor investor participation for some of these good businesses. But let me also remind you that the valuation that the market starts ascribing post-IPO at times can get unreal. And that's exactly where you may not be able to get value immediately or find great value. But it will probably be a momentum play at this point in time. So let it, cool down. But, for example, the EMS or the electronic manufacturing solution business in India is still way, way short of what global standards are. We are close to about 14 billion. Even Vietnam and South Korea are way ahead of us. Forget China. China is right at top at 900 plus. But even these two markets are pretty active and big. So there's a long runway in that sense. So there is growth. The optimistic view is there is growth. But, everything's good at a price. Some of these stocks could probably become expensive for some time till there is some sanity that comes into this thing, or better options that come into the space.
All right. Hi, Prakash. Good morning. Hope you had a good weekend, Prakash. Well, in Friday's trading session, the markets ended virtually at the low point of the day, but the stock that ended at the high point of the day was Tata Motors. You know, in the final hour of trade, you got news that the JLR sales were up by close to around 30% on a year-on-year basis. And also they're guiding for free cash flows to the tune of around £400 million for the quarter gone by. Do you expect some follow-through buying? Now it's not a 400-500 rupees stock. It's more than 600 rupees. But the news flow indeed was positive.
Good morning, Nigel. Yes, thanks. I did have a lovely weekend in spite of the 500 points loss on the Sensex on Friday. But, you know, the Tata Motors play is getting to become now a twofold, two-vector move. One is that the debt deleveraging story is seeming much more finite, much more feasible and very effective. So there will be that impact what you had on the balance sheet when Tata Steel did that deleveraging globally and started becoming so nimble. Of course, there are two different sectors, but automobiles seem to be in a very sweet spot of sorts, especially, if there is some sort of a demand revival globally, Tata Motors will find some new legs to this rally. It's already done about 60-70% this year. So there, the move may not be very rapid. But what it does is it sets a floor for Tata Motors to now be in this range. I mean, I was one of those believers that Tata Motors would not be able to scale these heights a couple of years back so quickly. But they've done smartly, they've done the right things. And interestingly, the EV business is where the competition is hotting up. I mean, you have M&M wanting to get into that space. You have Maruti launching only hybrid vehicles. So there is going to be a lot of competitive forces, intensity that will start impacting the market, the stock. But I think this deleveraging story is very big. It is something which is significantly going to move Tata Motors into a new orbit once that happens with this balance sheet. And don't be surprised if they actually end up getting into newer businesses or newer verticals within the auto space, especially the commercial vehicle side, which is languishing a bit. So, yeah, to answer your question specifically at 600, 18, 20, does the stock kind of have more legs? Marginally, yes, but it'll probably consolidate now and set the floor for around 570, 580, and then kind of have the new move when the next level of move when the balance sheet deleveraging starts fructifying.
Oh, absolutely. And, this is very important, right? The fact that the management now expects free cash flow generation in excess of £400 million. Axis Capital, in fact, released a note this morning where they said that the expectation was about 300 to 350 million pounds. So in that context, the free cash flow generation that the management has put out is higher than analyst expectations, which I think should get factored in perhaps in today's move as well. There could be a move higher this morning. Prakash, thanks for that. We'll, of course, discuss a lot more with you. Let's take...
Prakash Diwan is still with us on the show. Prakash, anything in the FMCG or in the consumer basket, which houses, of course, jewelry to QSRs to the footwear companies, anything that you like right now and you would recommend a buy ahead of the earnings season?
So I think one of the key beneficiaries of this rationalization of unit prices and RM costs is going to be Britannia. It's a stock that probably is slipped off a lot of people's radar just because, FMCG as a space has not been, the hottest sector to be in. But going forward, post this monsoon, while it's unfortunate that we have a lot of floods in parts of India, but the kind of water levels that we've already attained in reservoirs tells you that at least the irrigated agriculture side is going to be fairly positive going ahead. And if globally things are kind of, commodity prices are softening and even food commodity, elements are easing out, I don't see any reason why, given their premiumization that's so successful, Britannia won't benefit. So I'm quite positive on that. It hasn't really run up also too much. So there is headroom in terms of a catch-up. And the other stock within this space is ITC, though, we do feel it's run up so sharply, 60% or whatever in the last 1 year to this level. It's actually a catch-up. I mean, ITC should have been about $400 last year itself. It's just that, it kind of came into the party late. So my sense is it will continue to grow its FMCG business while all that capex that you just discussed on the hospitality side will also start throwing up cash at some point in time, given the huge traffic that they're getting. I mean, the Ahmedabad property, for example, given this World Cup between India and Pakistan, He's been sold out in the in the first couple of hours of that announcement. I mean, these kind of moves which happen will tell you that properties that they have built are actually sweating out the assets much faster, much better than what they've done traditionally in the past. So it's a whole new game for them as well on that sector. So I'm very positive. Matter of disclosure, I do have exposure to this name, but I think FMCG as a pack overall would probably start looking up from the next quarter, the next couple of quarters, very, very strong.
All right, Prakash, thank you for joining in. Have a great day and a good week as well. We'll come back to you later.